Good morning, welcome to CATEX TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Monday, October 6, 2008. It's 11:30 a.m. Eastern Daylight Time in the U.S., 4:30 p.m. in London. It's 5:30 p.m. in Florence, Italy, where we have viewers today. And in Mexico City, it's 9:30 a.m. If you need to reach us during the broadcast, please phone in toll-free at 1-866-67-CATEX. Overseas, our instant mail address is CATEX TV on AOL. Today in history, in 1981, 27 years ago, today, President Anwar el-Sadat of Egypt was assassinated while reviewing a parade by Islamic militants. The breaking news, if you will, today is the stock market, which is down about 407 points in New York before we went on. And this follows Asian markets tumbling as high as 5% last night. The European markets are down as well this morning, up to 4%, I think, in Germany and 3% in the FTSE in London. All of this apparently centering around whether or not, A, the $700 billion approved by the U.S. Congress on Friday and signed Friday night by President Bush will be enough money to take the toxic assets off the balance sheets of financial institutions, and B, concerns and questions about how the plan is going to be implemented. So we'll see if the market calms down a little bit by the end of the day. Now to our main stories. We've been reporting last week about some situations regarding the Hartford Financial Group up in Hartford, Connecticut. And in fact, this morning it was announced that Hartford said it will receive a $2.5 billion capital investment from German insurer Allianz. Hartford also warned of a big third quarter loss and announced a 40% cut to its quarterly dividend. According to Hartford CEO Ramani Ayer, the investment from Allianz strengthens our ability to weather volatile markets and continue to invest and vigorously compete in our businesses. With the investment, Hartford will finish the year with a capital margin of about $3.5 billion in excess of its requirements to maintain a AA level credit rating. Shares in Hartford have fallen 33% already this month and are down 69% for the year. Should we switch to this camera alone?
Can't get a background, but we have the green screen, but I can't get a background.
Okay, fine. And to our second story then, we're having a couple of technical difficulties here, but we'll work through it. The German government has announced a deal to save ailing mortgage lender Hypo Real Estate. The move by the government central bank and private banking sector to come up with a revised $68.5 billion deal for Hypo Bank on Sunday came despite German Chancellor Angela Merkel's previous opposition to a Europe-wide bailout of the financial sector, similar to what had occurred in the U.S. Hypo shares had lost 3/4 of their value last Monday. They clawed back some ground over the previous week, but on Friday they were down about 44% from their level a week earlier. An earlier $48 billion rescue package for the country's second largest mortgage lender had failed when a consortium of banks providing liquidity declined to participate. But late last night, Germany's federal financial regulator, the BaFin, said a solution had been found. Some updates on AIG. They're making some moves. AIG has decided to sell its 3 Japanese life insurance businesses. This is a move that's certain to spur a major realignment of the Japanese insurance industry. Combined premium revenue at the 3 Japanese businesses, AIG Star Life Insurance, AIG Edison Life Insurance, and American Life Insurance, accounts for about 1/3 of AIG's entire revenue in the life insurance business. Through American Life Insurance, or ALICO, though ALICO is headquartered in New York, it takes in about 70% of its revenue from its Japanese operation. ALICO had obtained Japan's life insurance business license in 1973. At the time, it was the first foreign-affiliated life insurer in the country. Hard hit by the ongoing financial crisis, AIG has decided to withdraw from its life business and concentrate on P&C. Also, AIG announced that it's going to sell its Philippine-American Life and General Insurance Company. This according to the unit's Philippine-based CEO. A number of local and foreign entities, he said, have expressed interest in acquiring all or parts of the group, which is involved in insurance, banking, and assets management. AIG says that the Philippine unit's net worth is a little bit over $1 billion US. The AIG spokesperson said that AIG has hired investment banks JP Morgan and Blackstone to advise it on the sale. The advisors will help AIG decide whether to sell Filipino Life as a whole or in part. Munich Re is coming up with their estimates of the losses that they're going to sustain from the American hurricanes. They now say that the results of Gustav and Ike could cost them as much as $500 million. They also say that the two hurricanes could cost the insurance industry up to $20 billion, which is significantly more than predictions by other reinsurers or by cat modelers. A statement from Munich Re said that the company estimates its own combined loss from the hurricanes to be $500 million net, with most of that, about $400 million, coming from Ike. Munich Re on November 7th is expected to announce its Q3 results. Munich Re's board members have said that as a result of the hurricanes, they expect rates to reverse and go higher as they approach the 1/1 renewal season. Brussels, the capital of Belgium and the capital of the European Union, is effectively shut down today. It's come to a virtual standstill as a result of a labor action. International train services have been halted, government offices are closed, thousands of workers across the capital are protesting against rising living costs. The public sector and the seat of the main European Union institutions was the worst affected, while some schools also closed alongside factories. The Trade Union Day of Action saw nearly all the public transport in Brussels grounded late Sunday night, with most tram lines paralyzed and very few underground metro trains running. In the midst of the financial storm sweeping through Europe, Eurostar trains to London and Paris, as well as high-speed Thalys services to France, Germany, and Holland, were not running. Only the Belgian banks made a point of opening, seeking to reassure anxious customers. In Belgium's second-largest city of Antwerp, museums and libraries were closed, while in the city of Bruges, all public offices were closed as well. Now we'll go to a word from our sponsors to our commercial break.
From prehistoric time to today, man's progress has been marked by his ability to fashion tools and use them to his advantage. From early humans making tools from stone, man evolved and was soon trading with other men. Money evolved, and tools such as the abacus to handle complex money transactions were developed. By the end of the 19th century, machines such as the cash register began to appear. 100 years later, we have even better computer-driven machines which track stock, change prices, and automatically reorder. Meanwhile, the reinsurance industry has failed to embrace man's drive for progress. The reinsurance industry today would be as familiar to practitioners from the 1800s as it is to modern underwriters. An underwriter or broker from 1800 would settle nicely into today's business. That is, until now. For the reinsurance industry, pivot point changes everything. Soon it will be understood that the period before pivot point was as